GM, everybody. Big news in the world of crypto brought to you by yours truly, the DeFi defense lawyer. Coinbase has partnered with PNC Bank. I cannot stress the importance of this for the sector. This is an amazing development, which is going to open the door for what I believe will be the stablecoin supercycle. Now, let's talk about what happened. PNC Bank, a federally chartered bank, has partnered with Coinbase and is going to offer crypto services through Coinbase's crypto as a service platform. Now, this means that Coinbase has become the largest crypto native bank in the United States. This is a big development and has many implications for the sector, because what this opens the door to is to offering consumers through Coinbase's app everything, including traditional banking services. PNC customers can now buy, hold, sell all cryptocurrencies that are offered on Coinbase directly through their bank without needing to go through a separate exchange. For Coinbase, this means that the on-ramp and off-ramp of fiat no longer has to go through an intermediary bank. If you will recall, traditionally, when we bought and sold crypto on Coinbase, we'd have to connect to a bank in order to move that crypto in fiat out of Coinbase and into our bank account and turn it into cash. That middle intermediary has now been eliminated, and Coinbase is that bank. These banking services will be part of a two-way partnership. This move now makes PNC one of the largest US banks to launch crypto services at massive scale. This is big for PNC Bank, but I think this is even bigger for Coinbase, because Coinbase has struggled for a long time trying to find its place in the regulatory and legal compliance world, because we just lacked all of that regulatory and legal clarity when it came to crypto. If you recall, previously, Coinbase was regulated through the SEC. They had to be treated as a money transmitter, which means they had to go through the arduous task of getting state licenses across the 50 state lines in order to offer their services, and they had no access to the federally regulated banking system. This created a lot of friction and uncertainty. Now let's talk about what this merger, what this partnership now means for cryptocurrency under Coinbase's umbrella. Regulatory status. We just kind of touched on this. We're finally going to get some regulatory status, which means that federally regulated banks, which operate under the Office of the Comptroller of Currency, the OCC, their supervision and regulation is strictly monitored by the OCC. And now Coinbase is entering that regulatory gambit. So the price you pay for mass adoption and for getting into traditional banking is you're going to have to comply with all those banking requirements, AML, KYC, and OCC standards. Now, this is actually a net good for Coinbase, because traditional banks, which are regulated by OCC, FDIC, and other federal oversight laws, enjoy the benefits of all those things as well. Coinbase, like we just said, has largely been left out of that and had to pursue a more non-traditional route to getting into the money transmission game. And now all of that is over. They no longer have to worry about pursuing those charter licenses with states, maintaining those charter licenses with states. They now fall under the federal banking regs, which means that they're in one regulatory lane, which covers all of it. That's huge. Access to payments. Direct access to Fed payment system has now opened up for Coinbase, which means they get to play with the big banks in the same way that big banks play, as far as access to FedWire, ACH wires, without the need to rely on any intermediary banking. Remember that we had the debanking of the crypto sector through Operation Choke Point 2.0, and that it was difficult for businesses like Coinbase, Kraken, and others to find banks that were willing to work with them. And now they don't need to find those banks, because through a partnership and a bank charter with an existing major bank, they have just eliminated that. What does this open the door to? Without the need for intermediaries, that means that 24/7, 365 days a year, Coinbase can move stable coins just like banks move money. Don't have to go through banks anymore. Don't have to rely. This direct access to the payment networks that banks enjoy is going to be a game changer because unlike banks, Coinbase is going to be running 24/7. Banks are still operating under antiquated banking hours, and they're quickly realizing they need to adapt. And those that do will win this cycle. Those that don't will lose consumers. So the indirect benefits of this, normally Coinbase had to partner with banks to provide those services. That's gone now, and they now are a bank, meaning all those Coinbase apps that are sitting in people's smartphones, all those people that you onboarded at Thanksgiving and told them to buy Bitcoin using Coinbase, and maybe they downloaded the app, but they never actually bought Coinbase. Well, now they're going to quickly realize that little app in their phone is going to be their everything bank for crypto and for traditional fiat services. So access to payments is huge. Another interesting thing that comes out of this is deposit insurance. Banks enjoy the benefit of FDIC insurance for consumer deposits. We know that crypto centralized platforms did not fall under the gambit of FDIC insurance, which means that any fiat you held on Coinbase was not protected by FDIC coverage. Many found this to be a disadvantage to holding crypto on these platforms. FDIC insurance for deposits within the regulatory limits protects consumers. Now that Coinbase has partnered with PNC Bank, they probably have that same privilege of FDIC coverage for consumer deposits, which now makes Coinbase's banking arm more attractive to consumers because they don't have to worry about the lack of FDIC insurance coverage. This is huge. The last major thing that this does, and why I think this is going to ignite the stablecoin supercycle, it's going to be a net positive for US treasuries and dollar dominance in the world, is that now Coinbase can finally offer a full suite of banking services via its crypto trading platform. This opens the door to custody, crypto trading, crypto staking, and stablecoin issuance. I've said for a long time that I think that Coinbase will ultimately end up being the biggest bank in the United States because they're going to be the first to successfully merge digital assets and traditional banking rails under one umbrella. Timing for this could not have been better, considering that we have a very, very crypto-forward White House that wants to see mass adoption of crypto and realizes the importance of it for dollar dominance through stablecoins and for treasury marketplace demand. So now you combine this with what Coinbase has just done, and Coinbase has become the biggest crypto bank in the United States. This is a force multiplier because now, on top of what Coinbase already offers through their collaboration with USDC and Circle, now Coinbase is a potential issuer of stablecoins. Because remember, under the Genius Act, stablecoins have to either come through a regulated bank or the equivalent under the rules of a regulated bank. By being partnered with a fully chartered bank, Coinbase has now overcome that friction point and can be a stablecoin issuer themselves. I don't know if this opens the door to white labeling that. In other words, enabling other businesses through Coinbase's stablecoin issuance program to spin up their own stablecoins as a white label off of USDC and Coinbase. That's something interesting that I'm thinking about. There's obviously going to be some risk for Coinbase in doing that, and there's going to be some regulatory things that need to be ironed out. But Brian Armstrong has said that every major S&P 500 company is going to adopt stablecoins. You can see that they're going to need help to do that, and Coinbase may have just picked up the mantle. By planting their flag and establishing themselves as the everything app for crypto and banking, they've set themselves apart from banks. We know that banks have kind of put their toe in the pool and have played with the possibility of trading some crypto, custodying some crypto, but they haven't gone full in. By Coinbase offering a full suite of crypto services, including trading and custody, they've now separated themselves from native banks in a major way. They now have made it really challenging for traditional banks because why would consumers still want to move money at the speed of banks rely on banking hours when they can do everything through Coinbase's app, including have exposure to all cryptocurrencies and be able to move in and out of fiat seamlessly. This is a huge development for the sector. Kudos to Brian Armstrong and to Coinbase for doing this. Yes, it's going to come with a lot more regulatory compliance, but again, that's the price of growing. I think that this opens the door finally to what we've been wanting, which is mass adoption by non-native crypto consumers. Crypto consumers obviously understand all this. We know how this works, but non-native crypto consumers are still kind of confused. By putting everything in a simplified, centralized app like Coinbase, and by slowly integrating stablecoins into consumers via the benefits it brings to businesses for sending and receiving payments, to family offices, for getting into investments faster and easier, especially offshore opportunities, without having to rely on banks to be that intermediary to slow the process down, without having to rely on currency conversion. By giving consumers an alternative to all of this, by eliminating for businesses the need to go through credit card providers, all of this under one app via stablecoins is going to put a wallet in everyone's phone filled with stablecoins. Where's that USDC going to go? Well, of course, it'll go to fiat. That's obvious. But it will also potentially go back into the crypto marketplace. Because once you've got that wallet and you see how easy it is to swap from USDC to Solana to Ethereum to Bitcoin, that is inevitably going to be a force multiplier for massive crypto network adoption. If Brian Armstrong and Coinbase can pull off making crypto a $100 trillion market cap industry through facilitating this seamless integration, that's going to bolster demand for stable coins, because part of what's going to happen as the market cap of crypto jumps from where it is right now, 4 trillion. And I know I just said 100 trillion, and that might seem crazy to people, but it's not as crazy as you may think. Once you see the force multiplier effect of this, I can see that market cap of crypto rapidly increasing. And as it incrementally goes up, a portion of that is going to be in stable coins. And since those stable coins under the Genius Act have to be backed one-to-one by U.S. equivalent treasuries, that's going to boost demand for treasuries. That's going to boost demand for the dollar as the world reserve currency. And I think this will ultimately be a net good for America. So I'm very excited to hear this news. I'm going to keep a close eye on this and see how this goes. And I'm still thinking about interesting ways that businesses, family offices, and consumers can start to integrate these things and cut their bottom line, streamline their payment and receiving of payment processing systems. I'm excited about doing this, educating the community. Thanks for joining today. I hope everyone enjoyed this one. Of course, give me a follow. If you're not on TikTok with me, you need to get on TikTok with me at the DeFi Defense Lawyer. Share this one because I think this is important value and important news for the entire community. Have a great day, everyone, and thanks for joining the conversation.